Hi guys, welcome to this week's Global Money News Review. My name is Ola and I am excited to be here again this week. And if you haven't already, please subscribe to our channel because we talk about personal finance, investment, and the economy in ways that are relatable and you can take action on. So in these sessions, which happen every week, what we do, actually not generally, what we do is we discuss news and how it affects your pocket, like in real terms, right? How it actually affects your pocket. So stick around. It's just awareness, which is a major part of your financial journey. And so we'll start with the global news. On the global front, oh, I forgot to say, my name is Ola. I'm a CFA charter holder. I'm a finance professional. I've done almost 17 years in finance, and I moved from being a securities trader to being a financial educator. So you need to listen to me. Yeah. And so in the global news, President Trump announced additional tariffs on car importation into the United States. Now, what's interesting about this is the fact that America data, 2024 data showed that America imported about $240 million worth of cars. That is a lot of money. And their major partners or major countries they import from: Mexico, South Korea, Japan, and I think Canada, right? And Germany, actually, and Germany. And so you can just imagine how those countries and their manufacturing companies are going to be feeling right now, or like their heads will be reeling. Why? Because it's an additional 25% cost to the market. So if, for example, your car was being sold for 100K, right? It's not going to be 125. Just think about it, right? Why? Because the tariffs, you have to price the tariffs into your your car sale price. Like, do you understand? So a lot of people were reeling on the back of that, but there was something interesting that I saw in the news. While some people are complaining, there was an announcement that Hyundai, I'm not sure if that's pronounced properly. Some people say Hyundai, some people say Hyundai, but you know the company. Yeah. They are investing about 21 billion dollars to increase their capacity for production in America, right? So what are they saying? If the government is saying they want you to manufacture locally, they want to encourage local businesses, why can't I become a local business, right? Such that it positions them to be more competitive. Why? Because if, for example, Toyota has a car that would ordinarily be priced at 100K for ease of math, and it's not going to be 125, and I am producing in America the same car, same specs, blah blah blah, and I can keep my own at 100K, guess who's going to come to me to buy? Yeah. So what am I saying here? Whenever governments change, right, which is why there's a lot of focus on politics and the impact on, on governance, right? Whenever governance changes, whenever leadership changes, you always keep an eye, because and you always plan your business around it. Why? Um, because things can change. I need to move with the times. Oh, I see lots of people online. Please say hi. Oh, I see chats. I'm bringing it up. Yeah, hi. Hi, Michelle. Thank you so much. So yeah, so yes, so what am I saying in particular? Number one, follow the government, follow the policies that each political leader, at election season, one person is going for this, one person is going for that. Follow it. Why? Because it matters, right? And you can see how it matters significantly to these businesses, right? However, on a bigger scale, this whole Trump tariff thing, right? In the short run, it will positively impact US companies, right? Because the more they preserve the ability to price the way they want to, then they can make the money they want. There's less competition. It's taking away external competition, and it's a large market, so it's good for the companies. However, the consumer is forced to buy at a more expensive price. So, if, for example, I'm not particular. I'm not really trying to buy an Escalade or a Ford. I'm not particular about the car, but about the car. But I just want to get a car, and this is within my budget. It's cheap. It's Chinese or Chinese or whatever. I will buy it. But now I'm forced to either buy expensive external cars, imported cars, or buy the local ones, which are also expensive. So the impact, right, on the consumer is clear. Prices are going to go up. So another thing also that will be an impact, or that is an impact, is how other countries will respond, right? Because the fact is, if you increase tariffs, my business leaders would come to engage me and say, what can we do to respond? How do we manage it, if you get what I mean? But let's see. But for you as an individual, understand that follow the money wherever, like the way Hyundai is just going to, like, let's produce locally. Like that's a way to look at it also. Um and the next news out of the global scene is Guyana, right? Guyana is one small country somewhere that we don't know, right? It used to be a very, very poor nation, but they have discovered oil. Now, what are the things I want to highlight there? Um, Number one, they have done decades and decades of exploration, right? They have invested so much, and there was a conclusion, oh, they don't really have much, right? But they are now saying that by 2027, they'll be producing 1.3 million barrels per day. To put it into context, Nigeria discovered oil like maybe 40 years ago, for lack of, let me take at least 30 years ago. I'm very sure of that. No, more than, definitely more than. But Nigeria is producing 1.3 million barrels per day currently. 1.3, 1.4. If they do 1.6, 1.7, they are dancing. So imagine this small country. I said in 2 years' time, they're going to be producing up to $1.3 million per barrel. Now, what is the lesson here? Mobil has hit big because ExxonMobil is the company that led the exploration drive, and they found some offshore. It's like a massive, what's it called, asset block, right? So just imagine, so much has been invested over time, and that's somewhat the nature of investing, right? You put so much money, you're not sure, you're not on it, and to a point, bam, it clicks, and you are in the money. You are in a lot of money, and everybody now says, "Oh, this person was so lucky." No, 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 they're not lucky. They did a lot of work. They did a lot of work. So I want us to keep an eye out on Guyana, because it almost feels like um, they are going to, it's like the country's going to turn like this. I hope their leaders are able to manage in terms of making sure that the people get benefits and stuff from it. But they have entered the world map. You still say here no vacation destination. You understand? But that's how these things happen. So congratulations to the country as a whole. We look forward to how it's going to evolve over time. Um, and oh, hey, hi Esther. I see you. Hi Esther. So before we go on, we want to announce something. I'm going to announce across all platforms, social media, and all. We're starting a book. We're going to be recommending books every month. And one of the things I realized is that people would read books on their career, will read fiction, but they may not necessarily read finance books, right? And personal finance, reading books around personal finance investing, it helps you with decision making, it helps you with money mindset, it helps you with strategies. You know, when you're reading a book from someone that has done well in a particular thing, you can see how their mind works and you can adopt it, right? So we'll be recommending books every month. So our book for next month is The Secrets of a Millionaire Mind. Oh, my camera is mirroring. Let me see if you can. Is it possible? Can you see? We'll put it up though. Ah, it's too much light. The lighting is not good. Yeah, I'm not. It's better here. Secrets of a Millionaire Mind, but it's mirrored. Change it next time. But we're going to be recommending. We'll put the link in the description for you to purchase it on Amazon. Book, ebook version, and just buy and read. Why is it important? Because you need to expand your mind. There's just one thing that you can do to secure your finances. There are a lot of things. So reading books is also one of them, right? And we'll be dropping links. Please just check the description after this session, and you would see it. Um, what else do I want to announce on the back of that? Oh yes, every week we'll be picking like a clip from the book and talking about it, right? We'll just pick something and just highlight it and just remind that there's a book you should be reading and all. So please join us. We encourage you to read a book. Yeah. Moving on to Nigeria. Oh, this is quite interesting news. In the club, of course, you know these sessions are powered by the Money with Club. We had like an extensive banter slash conversation around this. Zenith Bank and what's it called, GTB, announced their results or released their results in the past week. Now, first of all, just give it up to the two of them. That's just the first thing. Those two companies are making waves. Now, for me, what's particularly painful for me is that they are doing so well, like so. But every time you are in an economy where the currency is giving you gas bows, it shows, because they actually should be very, very big banks globally. Like like give it to them. They are doing amazingly well. So what we want to do is we want to actually compare the two companies, right? Because there's always that thing, like, who's better, blah blah blah, right? So in terms of total asset, GTB has more, like, has less, like 14 trillion in total assets. Zenith Bank has 29 trillion in total assets. Now, what does that mean? Zenith Bank technically has like two times the number of assets, the amount of assets. You know, it's assets that make money, loans, treasury bills, those are what assets are. Zenith Bank has two times the amount of assets um, that GTB does, such that their asset base is more stable. If wind blows, yeah, they can, there are different things they can revert to, right? Of course, there are also the liquid assets, blah blah blah, but their asset base is bigger, right? But in terms of liabilities, also logically, because balance sheet is assets, when a balance sheet balance is assets is equal to liability plus shareholders funds, abi. If you don't know, just know. But basically, they are liabilities, meaning how much they borrowed or taking from people. Zenith Bank also has the same thing, double, almost double the amount that GTB does, right? What that means is that they have more to manage technically, right? In terms of liability, in terms of clients, in terms of a massive balance sheet, asset and liability side. But then when you now look at shareholders' funds, that's equity. Zenith Bank also has double GTB, right? Like, so GTB is at 2 trillion, Zenith Bank is at 4 trillion. But you guys think about the numbers, trillion, that's what we are talking about here. And so, but then let's give it to them. Both are good, right? Those numbers are fantastic, right? So the higher shareholders funds means that you can take more risk. Like, if anything goes wrong, your you have, what's it called, the cash to absorb losses. So generally what happens is that if there's a loss, right, or if a loan goes bad, you hit it to capital. So if you have more capital, you have more capacity to take on, to absorb losses, one, and also means you have more capacity to create assets, which is definitely why Zenith Bank's assets is almost times two, because their shareholders funds is almost times two. That's their equity, right? I hope you guys are not lost here. But in terms of profitability, that's the interesting part. They are at par. What that really tells you is that GTB has a smaller balance sheet, smaller assets, smaller liability, but they are optimizing very well. They are optimizing extremely well. They are optimizing like time, like double the time, the amount of effort. Like, their efficiency is technically twice that of Zenith Bank, right? Now, the fact is this: Zenith Bank has like a slight trade, maybe like 200 million, 200 billion, yeah? Or is it 20 billion? 20 billion, like something very little. There's a slight difference. Like, Zenith Bank has higher profitability. But when you look at the number of assets used to generate that profitability, you actually give it to GTB. You actually give it to GTB because GTB is an efficiently run bank. Yes, I know. Maybe you're exchanging your stress for their profitability, but I know. Now, what does this mean? Like, why am I comparing, right? So who is better? Because there's always that conversation. So I will say the pros for GTB, things that make GTB good, and then things that stand out for Zenith Bank. But GTB is definitely more efficient. Um, ECB has less liabilities, right? So there's less managing of balance sheet, less, oh, my money has gone, we need to hustle to get money. There's less of that, right? GTB is a more efficient bank, and GTB has a higher earnings per share, meaning that for a shareholder, I own 1 unit and they are making on this one naira or 1 unit of stock that I own of GTB. I have the company is making a certain amount of money, and that money is high. It's like 30 something. Let me even check. Yes, GCB has a higher earnings per share, about 35 compared to Zenith Bank that is 32. Right? Now, for Zenith Bank, what are the pros of Zenith Bank? Or where is Zenith Bank standing now? It's a bigger balance sheet, so they can take up yeah. Just slightly higher profit, right? And then a more resilient financial structure. But what am I saying in summary, right? Both companies are doing amazing. Like they're like this. Like they are like this. Now, of course, because Zenith Bank has a bigger balance, bigger shareholders funds, they have capacity to do more in terms of assets. But generally, as your asset size grows and your balance sheet grows, your efficiency drops. And that is what we are seeing. But in terms of strong, well capitalized, going somewhere bank, Zenith Bank and GTB are doing well. So big ups to them. Now the cool part is that if you are a shareholder, you would have collected alerts. So you see all these ones where you be saying, oh, and then the stock price has gone up also. Both of them, right? They responded to this news. It's amazing news, right? Now, why am I highlighting? Because you will shout, you shout, you shout. Stock market is not this. Stock market is not. These stocks were at 20 something last year. Zenith Bank, no, GTB, for example, was at 30 something last year, it's at 60 something. And you're saying that people are not making money on the stock market despite the economy. And I put it to you that if the economy was better, this stock prices should not be less than 100. They should not. Both of them, they like the economy just stabilizes, improves, everything just starts moving well. They shouldn't be. So if you are sitting on the sideline and thinking that the stock market is dead, like it's not so. People just collected alerts or alerts are coming to their accounts, one of the two. All right. And so if you're a stock investor, please let me see in the chat. Say hi. Hi, alert received and all. Oh, and then something I also wanted to announce, right? Let me see if I can put it up. So we are doing like a soft launch. We are having a workshop in April, right? And we just have like 50 slots because it's a personal financial planning workshop, and it's for you if you said I need to put my finances in order. I don't know where to put what. I don't know, am I saving well? Am I doing it right? Am I, all those questions, right? If you need to put your finances in order, it's a live online workshop, which is why we have to cap the number of people in it, right? It's a live online. It's April 26th. And then we did a soft launch. We gave like coupon codes to a couple of platforms that we have access to, right? Because we don't have many slots, right? So if you want to join in, if you think that it's very important to you to put your finance in order, at the end of the workshop, let me tell you what the outcome is. You would have a playbook, meaning that as we are going through the workshop, you'll be deciding on, when I get this money, this is what I do with it. I am going to open this account and this is why. I am going to do this and this is why. These are the things to manage my risk. These are my generational wealth plans, like that kind of thing, where like you come out with a workbook. And before the workshop starting April 1, for those that have already registered, because people have already started registering, sorry, we're not really making noise about it that much, right? For those that have registered, they will start getting like their worksheets. So there are different tasks you need to do in preparing for the workshop itself, and you'll start getting those emails from April 1. So if you want to, we'll drop the link in the description box. If you want to find out more, drop the link in the description box, and you can also scan the barcode. That barcode is working, and sign up. Or if you have any questions, chat us up on social media here, right? If you want anybody to answer any questions, please do. But these are kind of things that we do, and it has to be small. We can't like open it up, because we need to be able to answer people's questions on the go during the session, if you get what I mean. Please share with a friend also, someone that is saying they are confused. You haven't received any alerts, so I love this. Share it with friends, right? If you know that they need to put their finances in order. So thank you on that. And then finally, Africa news. Oh, this was actually some good news. So Kenya Airways, because its first profit in 12 years. Now, the fun fact is that national carriers generally tend to struggle. That's the trend, right? A lot of times, even if you read Richard Branson's book, he was talking about the business of airline, like the airline business, and how it is a struggle, and how the companies that tend to thrive are supported by their governments. It's a general trend. So first of all, don't even look at Kenya Airways like that, like you people, how far, right? It's a general trend. So you need to inject a lot of capital for scale so that you can actually be profitable, right? And so Kenya is having all sorts of challenges. So that profitability might is that scale capacity and capital for scale is, you have to put things in order of priority, right? But then let's look at it. Kenya Airways, they entered into a profit, but the profit, in fairness, was driven by what's it called, currency appreciation. A whole lot of it was driven by currency appreciation from like the Kenyan currency, Kenyan shilling appreciating. That was like the a major driver, and then there was some operational costs, efficiency and stuff that helped it. Now, it's the first profit in over a decade. That's one. They improve slightly on operational efficiency. That's another. However, they are also explaining that their future growth is tied to infrastructure development, right? They need bigger planes, they need a bigger airport. There's a lot that needs to be invested. And so the question really is that will they be able to do that for this to be sustained? Because if you are so exposed to exchange rates, as like you are sitting on a keg of gunpowder. But then the thing to note is that because it's a national carrier, they are somewhat always, except if the country decides to shut it down, and I doubt if they will because they're trying to improve on their tourism, they would somewhat always get a bailout. I think they got like a 150 million bailout from their government recently also. But yeah, it's a positive step in the right direction. However, long term, there was only a time we were talking about listing, but this kind of financials are not the kind of financials that you would present for listing. However, because we say that what they need is investment in infrastructure, if they would find that buyer with a large and deep pocket, or they can actually do a proper capital raise that will give them what they need to like get to a certain level of capacity, the sky is the limit because they're also doing other things to improve on their tourism. So, like, big ups to them. We wish them well. And we hope that as a business, they'll be less dependent on currency. And so that's that for that this week. Thank you so much for joining in. I'm trying to see if I missed out anything. Thank you so much for joining in. And see you next week. Bye bye. Let me see if there's anyone I missed out on. Oh, Pepele said she hasn't gotten any dividends. And oh, David, I see you. Hi, Esther. Thank you so much for joining in. And please be mindful to share with your friends and also buy our book. Yes, our book, Secrets of a Millionaire Mind. I'll be checking in every week. And then, of course, so this book is for April. And then May, we will have another book. So we'll announce the book in April for May.